The broadcast is now starting. All attendees are in listen-only mode.
Good turnaround Tuesday, Face. How's everyone doing today? So King Dollar, Larry Kudlow, King Dollar. So still see no reason with the kind of things I do, except it being a turnaround Tuesday, that I want to short it here. But just want to point out the yen, with all this dollar strength, the yen led the rally, right? The yen's been as strong or stronger than the dollar, especially last week. So thank you, Amanda. I really suggest everyone join and hang out with Amanda Sweeney in our chat room. I'm telling you, she's a top gun. You know, I have people on Twitter commenting, guys like Brian Twomey, who's been following her for quite some time, and he's an expert in his own right and says that her stuff is excellent. So if you haven't done it yet, at least take a trial. I think you should take a 20-year membership. We're coming up with, that's not a lifetime, but 20-year membership for the price of 10. That's our new promo. So you get a 20-year. Anyone interested in a 20-year membership? Give me Y if you are. I know I am. I'm signed up. So that means you guys are stuck with me for another 18 years. Can you believe that? I'm going to be around for another 18 years. Man, huh? All right. So anyway, turnaround Tuesday, and you know, if I'm going to fade anything, I want to see what happens here in the yen. Here's a 1 hour, and it's just a scalp. It would be counter trend because obviously the trend's up. Let's see where the RSI is if the Japanese yen makes a new high up here. Give me a Y if you understand it. So, you know, we were confirming there was a little divergence here, but the readings were too much momentum. Ideally, you want to see divergences with the RSI under 70. That's what I teach. They're better setups, and even better if there's more than one. So we'll see what happens with the yen. Also, I just want to show you a simple method I use. Okay, you know, and if you could count to 2, you could do it. So here's the sell-off yesterday we had in the indexes, and here's the NASDAQ 100. And this candle right here, the low was 70.86. Anyway, it's a 2-week reversal system. It's not really a system. It's just something I learned from somebody else, I don't know, 20 years ago or so, maybe longer. But all you do is you go to the weekly chart. So here's the weekly NASDAQ. And you just count back 2 weeks from this week. And since it's a weekly chart, you look at the close. So the close here was 70.82. 70.82 was the off number. And sometimes the market will go to it and you'll get a reaction off it. So here the low was, you know, right in the neighborhood, got down to 73, but there were a couple touches right around 80. So there's a gift to you guys. Check it out. Write down the numbers and see how they come into play. Just something else to put in your toolbox. So my guess, and crude's, you know, trying to rally after a bad week, kind of like what it did back here, and rallied back to new highs to clean out all the bears with a stop hunt. So my bet right here is that, I don't know, maybe we're going to go to 56.80, you know, take out this high, maybe 57. But I'm betting we take out these lows before we make a new high. So you have some fib levels up here. It'll probably tie into, you know, maybe another sell-off in the market. If the market's going to blow, and a lot of people are talking, you know, 28.50, I don't know. You know, it's possible if we could just put in one lower high, which we're going to find out about right now, right? Here's your break. if we could put in one lower high wherever this terminates, then I think you have something. A lot of people looking at this 2760 range in the S&Ps as being, I think it's 64 as being an important area. And the VIX really exploded. I remember I asked Steve yesterday to take a look at the VIX, and what a huge move and what a huge give back. So this is also possible that we're not going to revisit, just like the S&Ps may not revisit their highs if we're going to take out 2764. VIX may not see a new low. I'm not saying it can't jiggle down to 14 and again, but you see this high right here, pretty powerful. And I know VIX is a kind of a weird instrument, but if you just go by the reading, it's a confirmed high. So what that implies on the real simple implicators, there's a potential for another high. So be careful in equities. Maybe a good time to put on hedges, raise cash. And I just want to look at one more thing. I think it's yields. So, I've been talking about the potential for higher yields, and, that's also part of the end scenario. Also, we may have ended the correction in cryptos. Okay. Came back to what the 50% level was. So look, cryptos are looking pretty good. But I just wanted to show the 10-year yield. This was a real strong, powerful wave. And, maybe we're going to get an ABC, but really looking for the possibility, if we hold the moving average right here, of heading up towards, the 280 range. So this could be a breakout. Back under 268, I would say, comes back into doubt. But you would think the yen would continue to give us strength, although it led, it may begin to wane. The yen way outperformed the move in yields. So if we're going to 285 to 290 up here, it's going to be interesting to see where the yen's at when yields are up at that area, because after that, I think there's they're just shaking out all the bond bulls right now. But after this rally completes, there's a very good chance that we're going to head back down again into the low twos. So here's your weekly moving average comes in at 290 as well. So after this rally, whenever it completes, occurs, then we could see something like this from up here. Going to take you down under this 50 week, 200 week, 232 at least. So to me, this is just a correction. I don't think we're going right to new highs. And it probably ties in with when we get the next wave down in risk. So that's what I wanted to share with you. You're very welcome, Forex Gal. Any questions for me before I turn it over to Blake? You guys enjoying being in face? We're approaching 2 years of doing our best for free to help people. Hope that it's added value to what you're trying to accomplish as a trader. But I do want to stress it's only the tip of the iceberg. And if you're really serious about the business, you have to invest in yourself. Okay. And I think being a member here is an investment in yourself. Oh, yeah. The New York trip. Yeah. That's coming up this weekend. So that's a great opportunity for everyone to meet some of the team in person. So you get all these notifications here. I'm 4 behind. Right. So let's take a look at. And Steve's having a cocktail party here. Okay, so it's limited to 20 people. I'm kidding. So that the tab isn't too big. Don't come there just to have drinks. Come there to learn and press the flesh with the team and get to know us and tell your friends about it.
No, you're coming there to get drinks. If you're going to the drinking, yeah, you're going to get drinks.
All right. Well, okay. Go get loaded and meet the team.
Meet the team. drinks on Steve.
You'll even like him more, possibly. But no angry drunks. allowed. All right,
No
Blake. 'Cause I
tequila.
know some people, they kind of turn a little vicious after a few.
It's usually tequila. Tequila is usually the what puts people over the edge, I think.
My worst hangover ever.
Yeah.
When I was a lot younger. So anyway, it's amazing I could still remember it with old timers disease. But what are you thinking here, man? You know, I saw your I saw your Skype that the guys will be gone and we'll be a little short-handed, and that's when the S&P will be down 5% when things
Yeah,
get
I mean,
crazy.
that's probably, chances are that's probably going to happen. It's like volatility is like putting us all to sleep. We are seeing a little volatility in the cable this morning, but overall, it's been just a very sleepy market. And when the guys leave their desks, that's probably when the volatility is going to pick up.
Because it's happened to you how many times? I mean, some on big day.
Yeah, I'm not as good as I used to be. It used to be when I go on vacation, whenever I'd leave, I was going to be out of town. I was going to be away from the desk for a day. It was like it was clockwork for many years, and now I'm not so good at that. I'm not as good as I used to be. But maybe it's turned the tide towards Steve and Joe and Greg. So we'll see. But let's talk a little bit about the volatility we're seeing in the cable this morning. So between the Cox Barnier meeting, they didn't expect any breakthroughs in the meeting, so the cable came under some pressure. You can see how the pound sold off. Now we are just below the 38% retracement of this last move, but we're testing. Really, you can see this is the big, support zone. You can draw it like this. Actually, is probably a better way to draw it. Is something like this. We're testing like the support zone right now, and it's just below the 38% retracement, maybe even enough just to stop out some traders. I actually picked up some cable. My average is at, let me look at it. My average is at 25 right now. So I have a little piece, and but I am short the euro pound, so that's kind of up in my face a little bit as well. But I'm not really too terribly worried about it as long as we stay around here. I don't want us to drop much further. But yeah, I picked up a little bit of cable on this dip, and just because this is, like I said, this is a 38% retrace. And if you look at it from more of a longer term, I guess let me get rid of this.
And Blake, when you have a chance, I'd love to see your Dixie chart because it's so relentless. I'm wondering if you have anything that might make this advanced pause or anything like that.
Well, okay. Well, I'll take a look at that here in a moment. So,
okay, buddy.
We might be developing a more of a longer term flag pattern here too, as long as we can hold these levels. So I just don't want to see the cable much lower than 131. We just probed 131 stops just a moment ago, just below there, and we're popping right back up again. I think people really want to buy the cable. I think that overall we are looking at a no deal Brexit being priced out. It's just obviously a little bit of stutter step in the negotiations is causing a little bit of selling in the cable, but I think overall people are trying to buy cable on these dips. So I'm attempting to join them as well. And so that's what's I think we could have a kind of a flag pattern building here, and you can look at it like this, or I'm just kind of drawing some rough kind of trend lines that could look something like this, and we could be developing some sort of flag. And I'm like I said, I'm not too terribly worried about it. I'm trying to pick it up on dips. It's always it's the trades that make you sick are usually the good trades, the ones where you pick up and you're like, I'm gonna barf, and then those end up being the ones that are the better trades, especially when you're buying into a trend. If you think that the trend is higher overall, trying to buy dips is always going to be the tougher thing to do. But we'll see. Like I said, I want us to really get a foothold above the 131 level, and back up to 131.50 would be ultimately great. Now you asked to see the dollar index. The dollar index, the dollar index is pretty technical right now. I know we don't have a whole lot of volatility in the markets. It's been very just crappy volatility. But if you look at the dollar index, we basically, let me get that. Okay, so we're challenging the 618. We're just bounced off this. This is a broken trend line. Okay,
Right. Yeah.
Retested the broken trend line perfectly.
Right.
Came up to the 618, and we're just bouncing up against the 618. So, this could be, a little, and this is a 4-hour chart. So, it just kind of
a little triangle.
A little wedge, a little wedge building. And, could we eventually break out to the upside? Sure. But if we fail here, if we fail here, we could, come right back down again. And this, you can see the 618s here also rejected there, but, a breakout would be quite bullish for the dollar index. So I think, you just kind of gotta, just try to wait, it's not,
hurry up and wait, Blake.
It stinks, this is such a bad
Tom
market
Petty
right
said
now.
It, bro. The waiting is the hardest part. Tom Petty. Sorry to bore you.
The late great Tom Petty.
Yeah, he was great, wasn't
he? He was. He really was. No, you're not boring me. It's just the market. So here's the dollar yen. You talked about the dollar yen. We came under pressure yesterday. Equities, sold off. Yesterday, the dollar yen sold off a little bit, and we popped right back again. I mean, I have to admit, the dollar yen is pretty resilient. It is not selling off. And I think when we have this low volatility environment, everybody's talking about the carry trade. So, the market is still looking for, selling low yielding currencies, picking up the higher yielding currencies. And that's going to keep the dollar yen basically the yen under pressure, keeping upside pressure on the dollar yen until we see some sort of volatility pickup. The dollar yen's likely just to continue to be sideways, if not higher, just kind of grind.
Thanks for showing that dollar chart to me, bro.
The what?
Thank you. The dollar, the Dixie.
Oh, the Dixie. Yeah. You're welcome. So, as far as the dollar yen goes, unless volatility picks up, we're probably going to continue to grind higher. I do think that we're challenging some pretty key resistance. So the better thing to do, in my opinion, is buying the dollar yen at 111 versus trying to pay up here. So you want to wait for a little bit of a pullback on the dollar yen to see if you can get a better price if possible. The euro dollar is pretty quiet today. We rejected the 50% retracement, as we talked about on the week ahead video, and we've rolled over. But there's what are you going to do down here? Do you really want to short it? You're probably at a 50% retracement right now, and you're basically at the 50% retracement currently. So you don't want to. I think traders are a little nervous about trying to chase it lower. But at the same time, it's like, do you really want to be a buyer here either? So, there's not a lot of impetus to do much with the euro at this point. The Aussie, we had the RBA last night. Not a lot of volatility following the RBA, but I'll tell you, the Aussie has not been acting too well. I mean, the Aussie is trading pretty heavy, and I think now we're starting to risk a move back, below the 70-cent level. If I was long the Aussie, knowing that, wow, okay, there's going to be a China-U.S. trade deal more than likely. Why is the Aussie getting hit here? Well, if a deal gets announced, I mean, how's the Aussie going to respond? I've been in the camp, and most of you guys know this about me. I've been in the camp that if and when China and the U.S. announce some sort of trade agreement, I'm going to short the Aussie, especially if we get a pop. If there's an agreement in principle, I'm going to short a rally in the Aussie because I believe that whatever China-U.S. trade deal is put together, there's going to be less demand in Australia, more demand in the U.S., and it's going to be the overall deal is going to be worse for China, better for the U.S., and it's ultimately going to be worse for Australia as well. So I think that selling the Aussie on any rally is what I want to do. The problem is it's not even rallying. Even with the anticipation coming of some sort of Chinese agreement, the Aussie is still trading heavy. So we could really see some downside pressure at some point. I'm not short the Aussie at the moment. I think that it's trading very poorly. The Kiwi is right at support. We're at the 78% retracement right here, trend line support. I think the risk is that the Kiwi makes its way back down towards 67 cents soon. I think that is a risk, and the dollar Canadian, we have this inverted head and shoulder pattern. We are above the neckline right now, and we're making our way higher at this moment. Hold on one second. Okay. So anyway, the dollar Canadian has this inverted head and shoulder pattern. We're right at the neckline, and I picked up some dollar mex this morning, a little cheaper, and then I already got out of it, and I've been kind of scalping around, just trying to play this to the upside as well. But overall, guys, it's been a pretty quiet market. I think we're going to be watching the cable closely today. I know I am. So I'm just kind of trading around a little position here. I don't know if I want to stay long, but we'll see how it reacts. But with that being said, I'm going to pass it over to Steve and Stelios as they prepare, or at least Steve prepares to come to New York. Good morning, guys.
Good morning.
Good morning. Good morning. Hey, and I'm gonna have to step off the desk for a few minutes, but I wanted to say I hope you guys have a great trading session, and I know you'll talk about our sponsors and the New York Expo, so I'm gonna let you guys take over. Thanks, guys.
Good luck today, Blake.
Thanks, guys.
Okay.
Hi, hi, Stels.
Hey, how you doing?
Okay, good, buddy.
Okay. So let me just take over briefly and mention a few things. First of all, we had the RBA. Blake mentioned that it was actually more. There were a few dovish. If you compare the two statements of this month and the last month, there was a couple of dovish items thrown in. They mentioned that the economy slowed in the second half of 2018. But the all-important last paragraph, which really summarizes what the RBA is thinking more or less, that was unchanged completely. So maybe the market was expecting for something a little bit more dovish, but basically the Aussie is not, it's slightly lower against the dollar, but the dollar is higher against everything today. So it's not really underperforming on the back of the RBA. So that was the RBA, and we also had some numbers today out of Eurozone. We had some PMIs and sorry,
Australia. We also had Australian numbers, right? We had the current account.
Yeah.
Fourth quarter, it was a little bit better than expected, decently better actually.
Yeah. Well, the revision also was worse though. So I think overall, okay, maybe slightly better than expected, but really nothing major. We had PMIs out of the Eurozone, services PMI. It was better than expected, even in Italy. So there you go. And so that gave, so that gave the euro a little bit of a lift. We had UK services PMI came in at 51.3, expected at 49.9. So that beat as well. The interesting quote, which I saw about an hour ago, and I actually giggled a little bit. We've all forgotten about Italy now. Remember, there was a huge deal about the budget deficit, and there were the Italians wanted 2.6%, the Europeans wanted 2%. Then they came in somewhere in the middle. Well, we had a quote from one of the Lega Nord, senior members, a guy called Bagnai. If I say this Bagnai or whatever, I can't pronounce it properly. And he said that it would be difficult for the European Commission to sanction Italy if they raise their deficit to manage their economic slowdown. So that means, we agreed on something, but really, if we need to, we're going to raise it, and there's not much you can do. That's what they're saying. So, and if you remember, Steve, this is what we talked about at the time as well. They can say whatever number they want, but at the end of the day, this can all change. It can be whatever the hell they want it to be. So that was interesting. And the other thing which we had, and we have to make a note of this, even though it's not the currency we cover, the Chinese yuan, it definitely plays a huge role on global economies. So what happened yesterday is that China, they lowered their GDP forecasts, and slightly lower. I think they went to 6 to 6.5% range, which is I think about 0.5% lower than they had it before. And they raised their budget deficit by a little bit as well. And it looks like the Chinese economy, it's in line with pretty much all the other major economies. It's looking like it's taking a turn lower, slow turn lower. We know nothing major. There's no hard landing.
Is that code for they're going to let the yuan go below 7 or above 7, meaning that they, maybe they put this out near the end of these negotiations, saying, if we don't come to terms, we're going to do what we did last year and let the yuan go, so we don't get hurt as much by tariffs by having a weaker currency. Is that possible, bro?
It is definitely possible, to say it in a sideways way, like they are now. Yeah, absolutely. Okay. They also, it's a very good comment, and they also did say that they're going to cut quite a bit in taxes, and they're going to increase infrastructure investment. They're going to raise lending to small firms. So they're going to try and boost a stimulus basically for their economy. So,
domestic.
Yeah, exactly. So that's in line with what you were saying, Dale, and it's something that we have to keep an eye on. Coach,
change my name. It's legal.
Sorry, we need to see the paperwork first before we acknowledge that.
Oh, okay. Yeah, someone told me it's better for me, some new age kind of stuff or mystical stuff to have 5 letters in my name, so I had to change my name from Dale to Coach.
4 letters not enough, right?
I don't know. It was bringing me bad luck, they said. I said, I don't know. I've been very lucky, fortunate.
Okay. Let's see what happens with 5 letters. You might get 25% more fortunate.
All right.
Otherwise, not much else to say. Blake actually did talk about the meeting between Cox and Barnier. They expect no breakthrough. That's what has been said so far. And also a spokesman for the UK said that there is still lots of work to do on the backstop. So the market's getting a little bit excited about the potential of either a delay for Article 50 or some kind of deal. But these guys are reminding us.
Someone named Cox was talking about the backstop. Okay, that's interesting.
Yeah,
I'm going to write it
down. Hey, Stel, you notice that NOK-SEK spread today? Look at what it's doing today.
I haven't seen it actually. What is it doing?
Yeah.
So
I was asking you about it yesterday. So it's approaching an even better sell zone for you, because that's what you were looking to do. That seasonal trade to the upside. Long NOK, short SEK.
Yeah.
If we break out above this trend line, it's going to be, it should produce some very nice continuation.
Yeah.
But so far we still remain capped in this symmetrical triangle.
I like this pair to the upside, but I would only really look at going long if it gets close to the bottom end of that triangle. What is the triangle? Yeah. So like one of 4 or something. Yeah. Unless it breaks out, of course. Yeah.
Because if it does, it should be nice. Okay, so Stelio, nothing to write home about. I mean, the better PMIs were definitely, good. Also, by the way, since I know that Josh spoke about that, so I don't forget, in Real Vision about the USD ZAR, we also had South African GDP for 4th quarter. It came in worse than expected, 1.4 versus 1.8 that was expected, and versus the previous reading, which was 2.6. So but we haven't seen some good follow through so far. Regardless, USDZAR is above this big triangle, so I do think that this trade might play out quite nicely during the next few weeks. So that has to do with data. Today we have services PMI coming up for the US, ISM non-manufacturing as well, new home sales, which the forecast is abysmal, minus 8.7, and we have IV PMI for Canada, all of them coming within the next 1.5 hours from now. Anyhow, having said that, obviously the pound is, quite under quite a lot of pressure today. We've been giving up more of the recent gains. If we go back to the 4-hour chart, you can see Blake showed this. I was monitoring this as a channel. We seem to be breaking below it, and then we have this previous channel's trend line that generally a nice confluence of supports, roughly at 130.30. I think that if we make it below that, it's not going to be a good sign for the pound. Euro is performing somewhat better today. That's why we have this this behavior from Euro pound, which is actually resuming its rebound, because probably the good PMIs, good anyhow, better than expected PMIs from Europe are helping the euro overperform the pound. So we're seeing this rebound. Regardless, I think that the euro pound still remains decently bearish, although this has been rather an expanding range. But we definitely made it now above this first area of resistance. So I think that the next area of resistance we might make it there is at 87.30. So Euro USD not doing much. And as I said, what I'm looking for is this triangle. I had to change my drawings like multiple times here because volatility is dropping by the day in Euro USD, and nothing is happening. Several formations that end up not playing out. Anyhow, this is the situation with those. Now, having to do with the Aussie and the Kiwi, as I said yesterday, the Aussie is threatening a breakdown from this. Likely it's a triangle. Regardless, I think that this 70-30, 70-40 horizontal support area is going to be quite key. If we do break below it, I think we're going to see more weakness. Oppositely, Kiwi is in the middle of a triangle that still gives it some room to move to the downside without actually breaking out. Now I wouldn't even rule out another push to the upside as long as we remain trapped here. But as you see, those two are also not doing us any favors. I mean, they're not producing something that is actionable, something that is tradable, unless you're a scalper and you're looking like a 5-15 minute charts. I don't think there is much to do here. Yesterday, Blake mentioned in the chart of the day, I don't know if you're watching this, we have a free blog site. Every day we have like a chart of the day. Yesterday, Blake mentioned the Aussie Kiwi. Aussie Kiwi still finding support here at the 61.8, but it does look like it can at any given point break to the downside and produce some follow through. The next downside target would be at 102. So I still favor more weakness from the side of the Aussie due to that. And if we want to have a look at the Aussie against the yen, nothing has changed here as well. I still think that being unable to push through this resistance zone, there is a decent probability that we're going to actually get rejected. And Kiwi yen, more or less the same situation. Kiwi looks better than the Aussie, but still there is a definite loss of upside momentum for now. Let me also open the question. What do you guys are asking? Euro yen. Yeah, we have a question about the Euro yen and actually about the pound yen as well. So let's have a look at them. So Euro yen. Euro yen, since last week, I was monitoring this ascending channel. As you see, we briefly probed above it both on Friday and yesterday, but this channel is still holding. If we go to a lower time frame, to a 4-hour chart, you can see that. There we go. I was also looking at this channel. So, if you go down to a 4-hour chart, there's even a potential bullish interpretation here. It depends on how you draw the channel, because if you go on the daily, you can actually draw it in a way that, it hasn't broken out yet. So I think that, there is still this price action to begin with to the upside doesn't look that bullish. So I really wouldn't be surprised if Euro yen actually rolled over and moved lower, as in general the yen complex. But I have to say that in the short term, if you look at the 4-hour chart, you can see that we've had some break higher, and we came down, we retested briefly this channel, and it's holding. So quite mixed signals. I would still favor, as I said, the downside, but quite cautious. I think we need more price action. And if you see, the pound yen also produced, first of all, the pound yen was, restricted in the channel for quite a long time. We had a brief breakdown from this channel, but this lasted like 1 day or whatever it was. Then we jumped back within the channel. We then briefly poked above it, and now we're actually, about to enter the channel once again. So, in general, as you see, we have some price action that is more or less, descending. I mean, if we go to the daily chart, there it is. You can see that there is a daily chart. You can see that this was a bullish breakout. You can see it more clearly here. But, I want to see some follow through, right? As long as this broken channel is holding, though, I wouldn't be surprised if we saw another leg to the upside. Obviously, between euro and pound yen, if I wanted to be long one, that would be pound yen. I do think that there are high chances that we're going to have some more news from the UK that might sustain a bid for both the cable and the pound yen. Obviously, for the pound yen, we also need a risk to remain decently bid, because if we have some big turnover in risk, the yen factor is going to affect it. But I have to say that this channel that was actually in place since the very beginning of the year, just got recently violated to the upside. So I don't want to go against that, right? I was expecting that we might see another rejection from there and move lower, but since we broke above it, I wouldn't want to fight this. Euro yen, much easier to do so. Steve, hi, what do you think of gold, pound Aussie, pound Q? Okay, let's begin by the pound pairs that you're asking for, since we are already talking about pound pairs. So, pound Aussie. Pound Aussie, first of all, if we isolate the recent past here, you can see, let's say, from February, okay? Now, if we want to see the price action from February, this looks like a megaphone formation, right? You can see it here clearly. So there is really no trend here, right? I mean, every leg is extending more than the previous leg. And, we get bullish and bearish legs, one after the other. So, I have to say that I don't think that there is, a trend in the medium term. But the closer we get to this trend line that I'm showing you here, the higher the chance that we're going to get another rejection. And if we zoom in closer, you're going to see that, first of all, so far we got rejected from the previous high exactly, right? Which is definitely not a very good sign for the bulls, because they didn't manage to actually reclaim the upper hand by breaking above it. And even if we did break above it, there was this ascending channel. Its trend line was just a little bit higher, in which case I would be expecting some kind of a reaction. So what happens from here? First of all, there is a quite interesting zone here at 184.40. You can see it. It has been acting as support resistance, several times since March. So first of all, I want to see what's going to happen if we retest this zone. And second of all, I want to see, even if this breaks, what's going to happen when we retest this ascending channel support. So, until we break below this ascending channel, you have to respect the upside. Keeping in mind, though, as I said, that there is no real trend for, since whatever, February that was. So, the higher we are, the more it looks good in the short term to be short. But, in order for me to be looking aggressively shorter, lower, I would want to see this trend line break down and then look for continuation. Okay. Until that happens, something like this might actually take place. So, the key level is roughly at 183.40 at the moment, but 184.50 is also quite a nice area of support. So, those levels are the ones that matter. Pay attention to them and, act accordingly, because I don't know what's your personal bias. The situation with pound Kiwi is not much different. I mean, first of all, long-term ascending channel. I mean, since January 2016. So, I mean, this is a multi-year ascending channel. The characteristics of this channel are clearly corrective so far. So I have to say that, if you're asking me what's the next big move for the pound Kiwi, it really looks like it might be lower. But, being in the middle of this channel, nobody tells us that we can't actually, resume to the upside, come closer to this longer term channel resistance before we actually see some downside price action. So now if we come a little bit closer to the price action and we see what's happening here, first of all, we had this horizontal support resistance area that has, played its role here. We're seeing the pair getting rejected. We also have this ascending channel. We briefly broke below it, but in general, the market has been, respecting it. So the situation in the short term is not much different than with the pound Aussie. You need to respect the upside, but keep in mind the 61.8, we almost made it there, this horizontal support resistance area. I mean, I wouldn't be long here, and especially if we break below this trend line once again, I will be looking for lower prices. And if we end up breaking below this blue channel trend line, then I'm going to be looking quite a lot lower, because as I told you, this looks to me like a long-term corrective move. And, when it finally breaks, I think it should produce a very decent amount of downside. So, this is what I think with the pound Kiwi. I think that the pound Aussie looks cleaner. So if I had to trade one of the two, I would go for the pound Aussie.
Hey, Steve, can I interrupt you for a second?
Absolutely.
Our guest today is, I used the link for him to get in that Velo tweets, and he's saying that it's not working, the login. So could you Skype me a login that might work for him? I don't know why it's not, but maybe I need a different one for him.
I'll do that. I'll do that right now.
Okay, thank you, Stelio. Thank you.
Thank you, guys.
So we have questions now about the metals, about Nasdaq. Okay, let's start with indices. First of all, S&P was looking like it's going to have quite a bearish close yesterday, bearish key reversal. But once again, the plans protection team managed, close to the end of the session to help the index pull back. It actually managed to reclaim much of its losses, closed once again within this ascending wedge. So, nothing really to report here. Now we have a specific question about the Nasdaq. So let's have a look at it. As you see, the Nasdaq also within what looks like a likely ascending wedge. As you see, there is a clear loss of momentum. I mean, just look at the rate of increase that we had as long as we remained in this red ascending channel. And now we've decelerated while being in this wedge. So I would still favor some kind of a rejection and the move lower, but we don't have confirmation yet. So we need to remain patient. Same deal with the IWM. IWM was appreciating literally in a V-shaped fashion. Momentum slowed down a little bit. Then we had another acceleration of momentum, but it looked like being unsustainable since it was within an ascending wedge. We did break below the ascending wedge after reaching this resistance, but so far the follow through the downside has been unimpressive. So, I would want to see some kind of an acceleration lower for me to.
Under yesterday's low might do it in some of these indexes. What do you think?
Might, but with the recent, huge rally that we've had, doesn't feel like it's enough in any way. So even if we push the new highs from there, I will still consider that there is at least a very decent correction missing. So I'm not going to qualify these pullbacks as enough of a corrective move. So even if we push the new highs, I will be looking for a bigger correction to come rather soon, and not sometime afterwards. Since we got into the indexes, I have to say that the DAX did complete. It tagged 2 consecutive days yesterday and on Friday. The inverted head and shoulders formations target at 11,670. So far after reaching the target, we are seeing the index stalling. But as I've said multiple times, I think the most key level to watch out for here is the 11,800. It was the neckline of this big head and shoulders formation here, and I do think that the market is going to probably have a tough time breaking above it once we retest it from below. FTSE.
Robert Dunn, I just want to say thank you, Steve. Thank you, Stel, for the good link. Robert Dunn, I see you in here. We're on in 14 minutes. Thank you.
Yeah.
All right.
Absolutely. And if I finish and cover the questions, we can even go, earlier. Now, one of the indices I wanted to show, and you remember that, Dale, very well. You remember that I was talking about a potential breakout in the Shanghai Composite, right?
Yeah, and EEM. I mean, but Shanghai, I remember that.
Yeah, look what has happened here.
Yeah.
I mean, after breaking out from this triangle, we've had another 16% higher, right?
Yeah, great call, Steve.
This has been an explosive move higher. I hope some of you could, had access to trade this. Now the daily RSI has actually reached like 83, more, higher readings than 83. So obviously, it is bound for some kind of a, short-term pullback. But I have to say that this breakout here and this momentum that we're seeing validate, that this is like a reliable move. The FXI has also broken higher, not as strong of a move, but it still has broken higher. And the emerging market.
Yeah, you called that before it broke out. So all I could say is fade Steve Volge at your peril, your own peril. That's all I could say. All right, because I've tried it. Don't do it. I've tried it.
So nice breakouts in them, and that was another thing I was looking at, the Australian index. This was a perfect example of what we call an overthrow. This was a perfect wedge. We then had an overthrow. I bet this overthrow, lower, got a lot of people getting out of this market just at the turning point. And look what has happened since. I mean, a huge move higher, so far channeled, but there is now a clear loss of momentum here as well. We are striving to hold support. So it looks to me like the Australian 200 index is also probably closer to a corrective move lower than anything else. But I have to say that this move higher looks rather impulsive. So any pullback, I will consider it to be corrective until proven otherwise. So now that we've covered those, we can go back to the rest of the questions. We had a question about the USD CAD, and I have to say that you need to be careful here in the USD CAD because the USD CAD is attempting to break higher from this triangle, in which case it probably invalidates the scenario that we might have another push lower. Actually, if you're looking at this as an inverted head and shoulders formation, that means that we've already triggered this formation. And if you really like it to the upside, that means that you can look forward to, let's measure this. Whoop. No, we need extension. There you are. So we are looking at a move towards there. 135, what is it? 135.84. So 135.84 is the target of this inverted head and shoulders formation. So it looks good for more upside. I'm remaining a little bit skeptical because I want to see a daily close also, because yesterday we were also breaking above this trend line and we didn't manage to close above it. So, before I actually hold my breath, I want to see a daily close above this trend line. Then I think you have every reason to to take this trade if you actually like the USD CAD to the upside. Another correlated pair we've talked several times about it is the USD NOK. In my opinion, if you want to be long, USD NOK is probably even a better proposition. Why? Because it has produced a huge break higher from a very, very prolonged consolidation, a corrective move lower. And, we made several attempts to invalidate this breakout, but in every single case, bulls stepped in. And, this is something to take into account. So USD NOK, in my opinion, a better proposition for a long, USD CAD a better proposition for a short if you're looking to short it. Of course, I'm not advocating that you should. Now, a brief look in crude. Not that anything big has happened. As you see, I had mentioned since days ago that, in my opinion, you need to respect this range, 55 to 58. So far, we are consolidating within this range, and I have to say that the longer we spend consolidating within this range without actually breaking below 55, the higher the chances that we're going to be correcting in time rather in distance, rather in price. So the longer we spend consolidating in here, I think that the more the chances decrease that we're actually going to see prices go below 55 before another push to the upside. So be a little bit careful here. If you're looking for a corrective move lower, it might not come just yet, right? And in any case, 55 is a key level to watch. I wouldn't be jumping the gun before we get a confirmation that this level is breaking. I mentioned yesterday that I'm not really worried about the pullback in copper because, copper has broken above this rectangle. And, as long as we remain above it, we should see, sooner rather than later continuation higher. Today's price action so far shows that, the bulls are actually well in control of this. So I don't think that anything
you're
changed
a
there.
great example of what WD Gann says. If you don't learn how to change your mind, you won't have any change left, because you were a big bear in copper and rode it down and stayed with it for a while it kept testing the same breakout. But once it turned, you changed your mind. And
yes, you need to remain nimble. And my interpretation was this, Dale, if you remember.
It's a great example. Yeah, great example of someone not being stubborn. Yeah.
If this was a triangle with the resistance being, this, but support being that, which up until a point, it was looking like a nice triangle, right?
Right.
The interpretation was that we should see a break lower and one more push to the downside. But then we found support there and we came up. So far, the bearish interpretation was looking good because, you can easily come back, retest, the trend line.
That big blue candle that changed your mind.
Yeah, and then we got that big blue candle, and then you're like, something is looking, a little bit different here.
So Jack, be quick. Steve jumped out on the candlestick.
Yeah, so then you're left with only one interpretation, that you have a rectangle, and the perfect rectangle. I mean, it was, it held for a decent amount of time. So you expect that, holding for a decent amount of time is important. Why? Because you know that the more a range is holding, the more stop losses and limit orders are being built just outside the territory of that area, right? So you know that once you get a breakout, there is going to be some follow through. So once, since we broke to the upside, I think that, you shouldn't be fighting this. You shouldn't be fighting. That doesn't mean that you can get a false breakout, but you definitely shouldn't fight it, because statistically speaking, there is a decent chance that this formation is going to produce some follow through, and a decent chance that it's even going to complete its target, which is roughly up here in this area of resistance at 315, 317, roughly there. So I do think that people should be conscious of that. Now, having to do with gold, as I said yesterday, and the same deal applies. I mean, we're seeing some short-term loss of momentum because we had a big move lower. I think that we now have clear indications that even if this is a corrective move, there is more downside for gold and silver. So gold and silver should be treated as instruments that you should be selling rallies. So I think that we should take advantage of any pullback towards 1300 to short gold, because I do think that it's headed lower, even if this proves to be a corrective move of the rebound. Although I doubt that. I think that we might actually see lower prices. We can even come down and retest this triangle. So I believe there is a decent chance there is a lot more downside for gold. So far, we're seeing this move looking like a third wave the last 3-4 days. So I wouldn't be trying to fade this in any way. And here is silver, more or less the same deal here. So that's what I think about it.
And Steve, if we bounce first before getting to your lower targets, I know what you're going to be doing. Say we hold here, like gold has retested the low on the short-term stuff, and just missed, and it is diverging short-term. So would you be a seller at 1300, 1310 if we rallied right from here, $15 or so?
Oh yeah, absolutely.
So I thought.
Absolutely. Absolutely. I'm going to be scaling in if that happens. Yes, I'm going to be scaling in. You know me, I rarely go in full position.
Yeah, you piece in, piece out. Love the style. Yeah. I think that more people should adopt it in trying to have a perfect entry on a full position and a perfect out. It may happen once in a while that you can do that, but it's the exception, not the rule. So check it out. If you're a one lot trader, full standard lot, do 0.03, 0.03, 0.03, and come out the same way. I think it'll take a lot of the pressure off you. So
it does indeed. And something, it also gives you another ability. Let's assume that you have a level in mind that you want to start scaling in. Okay, and that level comes. So far, price action looks compelling. I mean, to what you were looking for. So you scale in and you put, let's say, 1/3 of a position, and then you see an acceleration to that direction. And now you start not liking price action, and although it gets to the second target that you had to put in a second third, you've now started feeling uncomfortable because you see that the momentum is not what you expected, because you were expecting some slowdown in momentum to give you more indications that whatever you're looking for.
So you're wrong smaller. You're wrong smaller when you do that.
Exactly.
Because it gives you time to assess it.
Yeah. So then psychologically, it feels much easier for you to say, something, just abandon this. I mean, I'm 1/3 of a position. Sure, just take some losses on 1/3 of a position, which in essence is like very little losses, and just let it be, because I don't like the price action anymore. And that's it. And then it makes your decision to abandon much easier to take. So this is another reason why I find this helpful. Now we have Scott asking if I'm long copper. No, I'm not long copper, and the reason is, as I had explained some time ago, I don't like risk on. I'm not a perma bear. When I say I don't like a risk on, is I don't think that the risk on we're seeing has anything to do with what we're fundamentally seeing. I think there is a big gap between what the market expects in the moment and the reality. That means that I'm very, very hesitant in taking positions that are highly correlated with risk on environment. Welcome back, Coach.
Okay.
That's why I intentionally wanted to be short copper on a confirmation of a breakdown, but I don't want to follow copper to the upside. I'm not saying it won't work. It has a decent chance of working, but I don't want to go against my fundamental bias. Okay, okay, Scott, if that explains it. If you want good indicator for on precious metals, look at COT report for commercial hedgers. When commercial hedgers are short, look for gold to go lower. But when they switch and go long, look for gold spot to get long gold, because that usually signals reversal. That is true, Joseph. Although sometimes you see, extreme readings, and you think that, okay, this is a good indication, but then you realize that readings can get a lot more extreme.
How about this too, Steve? Commercials have deeper pockets than most retail traders.
Undoubtedly.
They could be real early. Plus, they have the advantage of inventory if they're shorting it. So,
absolutely,
it's not. You still need to go to price action, in my opinion.
Exactly. So, although I agree with you that you should take indices, positioning and sentiment indices like the DSI, like the COTs, you should definitely take them into account. I don't think that you should trigger a trade solely based on those. Okay, that's my advice. Okay, Coach.
All right, buddy. Great review.
I'm going to be back tomorrow, obviously. So enjoy the interview.
Thank you very much. Robert Dunn, my Chicago trading warrior brother. I'm making you the presenter. It's been a long time. Looking forward to catching up with you, Robert. How are you? So you'll see a drop down menu for your mic and screen. Oh, look! Oh, come on! It's like a trip down memory lane with Robert. Just waiting for your mic to be activated. Let's see if I have you muted.
Okay, how about this now? Can you hear me?
You're good. You're good, Robert. Wow, how long's it been since you and I did this?
It's been a while. It's been a long time.
Yeah, so this is a pretty good segue, since it's been a long time, for you to tell us a little bit about how you got started and what you did. And you and I are from the same generation that got to live the picture that you're showing. Why don't you tell us, how it happened, Robert? I mean, on my first trip to the CME, I got lost. I took the train, and I actually got off at the Merchandise Mart. And I'm walking around there, and I'm asking people where the trading floor is. And someone finally said, "Son, this is where wholesalers show their goods. This is a Merchandise Mart, not the Mercantile Exchange." So I had to get back on the L and and finally made it to the gallery. So why don't you tell us how it happened for you? What was your first gig in the business, Bob?
Let's get this camera off.
Yeah, okay.
My first gig in the business, well, I was a mechanic before that, and working on race cars and engines.
Wow.
And I had friends that were down at the exchange. I knew they worked. They were done at work by 2 o'clock. I would see them at the park playing basketball.
Yeah.
So 30, there's a full court game going on, and there's a bunch of people there. I would be driving by the park because I'd be picking something up for work that I'd have to, go across town. So I'd pass by.
What park?
Hollywood Park.
Okay. All right.
Peterson and Kedzie.
Right.
And and I'd see these full court games going on at 2:30, and I'm like, I recognize cars there. I'd pull over and I'd see, boys, and I'd, hey, what, you guys don't work? Well, yeah, we're done. He says, what do you mean you're done? It's 2:30 out. I go, oh yeah, well, we're done. At that time when I was talking to these guys, it was just agricultural products. So, and they were done. The last one to close was something like 1:45. So, by 2:30, you could conceivably be at the park and you're playing basketball, and, things are happening. So I saw this and I was like, I couldn't believe it. I says, you're done at 2:30. And, I'm asking, well, what is this? What is the Mercantile Exchange? Actually, he said he works at the Merc.
Right.
And so I wasn't tying Mercantile Exchange and Merck together, at one point, because I thought
it could have been the drug company Merck.
Yeah, I mean, I didn't know any of that, and so then I'm saying, well, what do they do down there? And he says, oh, they trade cattle, pork bellies, hogs, and then he says, I could get you a job down here. They need runners, and I didn't know what a runner was. All I knew was, he's asking me, he could get me a job down there. And I knew that there were live animals. And I figured, a runner's job was sweeping up everything. And so, I was clueless. Clueless. So, I made a comment. I said, to myself, I'm thinking, I don't want to be around the smell. And
oh, you took a field trip as a kid to Hawthorne Melody Farm.
That's kind of what I thought it was going to be.
Okay.
And so I said, no, I'll keep my normal job. And, I kept it. And later on, I had a roommate who was a floor manager for one of the clearinghouses. And he was explaining to me short selling. And I'm arguing with him that you can't sell something you don't own. And this is going on for a while. And, maybe weeks later, I had an appointment downtown and, we agreed that, hey, we'll meet for lunch. And then he brought me on the trading floor. I met him down there and he welcome to the Merck. And I knew he worked at the Mercantile Exchange. And I'm thinking the Merck, this is where my buddy Fish and Nick works and everyone works. And then I saw them on the trading floor because he brought me up there and, there were no animals, obviously. And
oh, yeah, there were. They threw lots of elbows. Only they were the human kind.
Right. And then I saw it and, he was explaining to me what's going on. And it was pretty interesting to me. And, and then when I saw the parking lot and I saw the kind of cars that were in there, at least on level one, where a lot of the guys who had some really nice cars, they like to park on level one. They're all the big shots. And
I saw chauffeurs, man, drop people off in front.
Oh yeah,
Harry Madoff, a lot of the clearing firm owners were pretty rich. Yeah.
Well, and some of the order fillers too.
Yeah.
Harry Lawrence had a chauffeur.
Harry the Hat.
Yeah, I mean he always had a chauffeur.
Belly pit.
His chauffeur got arrested once for drunk driving, so his chauffeur had a chauffeur to drive him around for a while. So he got his license back.
I knew this would be fun. All right, so you're a runner, okay? And
no,
I
never became a runner. I just had kind of arguments at home with my wife, and quit my job and came down on the trading floor. I knew, I came down as my friend's clerk for about 3 months to observe. I just needed the clerk's badge. I didn't want to do anything. I wanted to just observe and learn how to trade. And so that's what I did. I was his clerk for 3 months, doing nothing, just, walking around and watching people and trying to figure it out. And then finally, I just said to myself, the only way you're going to get this is to actually do it. So I have to come down here, and I can't stand around for 3 months paper trading and think that I could do it. I have to actually do it.
So let me explain the term pre-internet. Paper trading was, you wrote down your trades and your stop and your target instead of having a demo account. So
yes.
The worst thing that could happen when you're paper trading, I used to say to people, was what happens when you're wrong? Do you get a paper cut?
Well, that's pretty much it. What happens when you're wrong? See, the difference is on the trading floor, you got to make a decision. Am I going to get out or not? And you also, can I get out? Because the person I'm going to try to get out with might have just sold it to, whatever he had to somebody else. And now I can't get out with that person. So you're not always able to get out. So what paper trading is, basically, you're writing down, oh, I got long Canadian dollar over here, and I got out over here when it gets to that price. It's easy to do that on paper and say, well, I would have got in here and I would have gotten out over here. But like I said, if, in real life, those bids and offers may not be there because someone standing next to them grabbed them and you didn't get them. So, you know, paper trading doesn't always work, but, you know, it kind of gives you an idea. If I look and say, here's where I would have gotten in at, you know, and you're honest.
You know, that's a great segue to the modern era of demo accounts. Bob, I know that you teach and you mentor people. Do you tell them that, you know, if they don't know how to take a demo account seriously, to at least like trade with micro lots for a long period of time, so at least they get the feel for having skin in the game, even though it's not a lot?
Yes, I want them to do that. I tell the people, you know, when we're first of all, when we're demo trading, do everything with market orders, because when you do things with limit orders on a demo account, your orders get filled a lot quicker. And so the reality isn't totally there. Right. But if you do everything with a market order, say, okay, I'm going to get in here, and then you press buy at the market, give up the edge to get in, which, you know, many people on the trading floor, that's how they entered trades, is market orders, and they're giving up an edge to get in. So, you know, if you do this and simulate, you give up the edge to get in, and you're giving up the edge to get out. You're doing everything with market orders. That's about as real as it gets. You know, do these simulated trades and use limit orders. It's not real, because you're getting filled a lot quicker, and you might have been buying 10 contracts, where in reality you might not have been able to even get one because you were staged in line in the correct order. So I always recommend market orders when we're doing simulate, and if we're successful trading with market orders, we will be successful in real time. And
let me ask you about this, Bob. You know, being on the floor as a runner, I was working as a runner for Dean Witter, actually. You know, where you could go into their store and set up an account in Sears, and also set up a stock account with Dean Witter. But I noticed when I was there how interested the order fillers were on orders that had STP at the end of it.
They love that. So did
okay. Yeah, stop. So I also noticed that when those orders were elected, there was kind of an audible roar, you know, that now algos do it. You don't hear anything except, you know, your account changes. But did you notice that too, that there were audible roars? And do you think that people say they knew, a lot of these order fillers knew there were a block of buy stops above the market, actually, you know, were long into them and then use that liquidity to take profits? And that's why there was usually fast markets happened in those conditions where brokers weren't held. What do you think? Do you think that there were stop hunts when human beings were doing this? And do you think there still are stop hunts, even though it's HFT and black boxes, etc.?
Yes, absolutely. See, what goes on is people think that, oh, this is a rigged game. They see the stops. They saw my stop. They ran right to my stop, stopped me out by one tick, and then the market went where I thought it was going to go, and it did it without me. This is a rigged game. It's not a rigged game. The thing is, they do see where the stops are, and they do go fishing for them. If you got deep pockets, you could fish for stops. And the reason why I say they don't physically see them, but they know where they're at, because when you're looking at a chart and you
exactly
see you've got a trend or you've got a zone there that's holding real nice support sitting there, you know that underneath that support there's sell stops. So
and right underneath them, a tick or two above or below swing highs and lows. You know, people say, Dale, how do you know where the stops are? I said, well, why don't you look at a chart and imagine you're short? Where would you put your buy stop? And I say, well, that's where everyone's is.
That's exactly what it is. It's where everyone's is. Yours might be 2 or 3 ticks above that line. Mine might be 4 or 5 or 6 ticks above that line, but they're above that line. And people go looking for them. Now, me as a local trader and many others, not just me, if I anticipate that there's stops over there, let's just say we're, you know, coming up into resistance, and I think that there's a whole bunch of buy stops above that resistance. I may, start loading up long, and if the market's slow, and this is what will happen, if you could run the market up, I mean, sometimes I might have to buy 100 contracts to sell 200 or 300. Now, when I was on the trading floor, I wasn't a 200 or 300 lot trader by any means, but I watched the banks do it. I watched bigger players do it. And, they start loading up their position. And then, when the market's kind of slow and it's trading up near there, they run it up. What's offered? They're looking for offers. Someone's offering 10 and 53. Buy 10 and 53. What else is offered? 54 on one, 55 on one, and then they trigger off the stops. And, if they think it's at 55, 54 on one, 55 on one, or maybe one local trader is offering a 57, which is off the market, but there's no better offers in front of that. I might say, buy one at 57, 207, and you're 7, and you're triggering all the stops that are in between those.
Have you also noticed that sometimes those are at least temporary turning points, and some of them turn out to be important ones?
Yes, some of them do. And that's when you mentioned before the letters STP. I want those orders because those are that's kind of bread and butter. If I'm short and I know there's a bunch of stops there, and you could run it down there, those are your outs. That's your out on the trade.
So now algos run it for liquidity to get out of the trade. That's the difference. Instead of it being, Harry the Hat and all the guys in the cattle pit doing it, or the belly pit, it's now black boxes and algos. So, I remember, I have a pretty good memory. The people I work with are amazed how I remember their trades and things that they say. And what I remember from our interview, Bob, is that you do something that pros do, that most amateurs can't do. And maybe we could see your trading setup. But I remember interviewing you, and you talked about, like, when you have a trend, you will press the advantage. You'll buy more as it proves another level being taken out, and then add more, and you're trailing your stop all the way. So why don't you talk to us a little bit about how you came to that type of methodology? Because most people, if they're long and they get a nice pop, they're booking it, whereas you might be building the position instead of getting out. So tell us a little bit about that. And am I correct that is still your trading style? And that must have been 3 years ago.
Yes, no, it's still my trading style. And I've watched a variety of different traders on that trading floor. I was fortunate to be down there when the superstars that we read about were still walking around the trading floor. Yeah, they had order fillers that filled stuff for them, but a lot of them were still doing it themselves. And, I was able to watch them do their thing. Now, it's not like you could walk up to them and ask them, well, what are you thinking about right now as you're doing that trade? What trade do you do? I can't really go up to them and ask them that. But the ones that I was friendlier with, that I got to be friendly with, yeah, you could ask them questions like that. But, you're watching these guys do certain things over and over again. You don't have to ask them. When you see the same guys doing pretty much the same thing over, and, like, for instance, with me, I would buy or sell something. I couldn't wait to get out of it. I wanted to ring the cash register and rack up some money, so I buy something. I was so quick to get out of these trades, and then I would watch, other guys come in and they, I'll buy 20, I'll buy 20, I'll buy 20, I'll buy 20. It was long 80 contracts, and walks away. And you don't see him come into the pit until later on in the day, and he's selling 80 contracts. And the market's 60, 70 ticks higher. Then you count up, wow, those must be the 80 he bought earlier because I sold him a couple. And then you're thinking, how much could he have made on that? And then you see, wow, he made about 72 ticks and 80 contracts, and, you're just like drooling. And, and I would see that over and over. And one thing that I observed is these guys weren't getting out at certain targets that, I might have had a target. This is where I have to get out at. They weren't getting out at certain targets. They were watching it go through those targets if they went through, and then they would buy more. Now, as it gets to the targets, they're tightening up their stop a little bit just in case that target does hold and the market turns around. But I've watched these guys do what I call pressing up, adding more to their position, adding more and adding more. One of the things that I teach in class and that everybody teaches in these classes, never add to a losing trade, because it'll bury you. Keep adding to losers, your money will run out real quick and you won't be there. I mean, I watched many guys on the trading floor bust out doing exactly just that. So, if you don't add to losers, and you never add to losers, but you do the opposite of what, because I've watched these guys do it, they add to the winners. They don't get out and say, when it gets to a certain level, and say, okay, this is all the money I want to make on this trade. I only need to make 7.
You add, like, say, for example, you're long 5 and you get through another area. Do you add the same quantity or less because the market's going up?
That's a good question. I personally, I have a 50% rule, because 50% corrections are fairly common in the market. So if it makes a nice little run today, for it to pull back 50%, it's not a big deal. And so if and I talk about in class, I says, greed is good. I use Gordon Gekko's word in the movie Wall Street. Greed is good. But then I throw in, greed is good, but being a pig is not. And there's a fine line between greed and pig. All right. So now going back to your question, how do you add on? If I'm long 5 contracts and now we run to a level and it's time for me to press up, add some more on, if I add 5 more on, or, and we have the money in our account, maybe I add 10 more on because I'm really getting greedy. That's one of the fine lines between greed and pig, because we're trading a highly leveraged product where, it doesn't have to move a ton and you could still make some good money. So if I have 5 on and then we get to another level and I buy 5 more, we get that 50% pullback. I'm at break even. We get a 51% pullback. I'm losing money. And it's hard to stay with those trades. It's hard for me to ride that winner when, I'm all of a sudden at break even in a short period of time. And then, one more tick, I'm losing money. So it's hard to stay with those trades. But if I'm long 5 contracts and now we're starting to go through one of my levels and I buy my 50% rule, 2.5 or less I could buy. Since I'm long 5, I go with 50% of my position that I've got sitting on the books. So I could buy 2.5 or less. And since I can't buy a half, it's going to be 2. So I'm long 5, I buy 2 more. If I get that 50% correction, I still got profit on the trade. Even with a 61% correction, I've got profit. Not as much as I'd like, but I still have profit.
So you're building a pyramid instead of an inverted one if you had bought 10.
And in class, I call it a Christmas tree. I see it like a Christmas tree. You want the bulk of your position. If you're long, you want the bulk of your position beneath you. And then you scale in, you put on a few more and a few more. And this way you're not what I call top heavy, because you start getting top heavy. If you put all the decorations on your Christmas tree and you start from the top down and you got the bulk of the ornaments and lights and everything on the very top, and as you're coming down to the bottom, it's getting very sparse because, you're a little too drunk when you started setting the tree up. You work from the top down. That tree is going to be top heavy and it's going to topple over. And that's what happens to your trade if you let it become top heavy. I mean, you might have $1 million, $2 million in your account and you're watching it go up and you buy 10 and then you buy 15 more and then you buy 20 more. You're inverted. Your Christmas tree is inverted and all your weight is above you, and it'll be real easy to give all that money back and more. And that too, I've watched it happen firsthand, and you being on the trading floor, you've seen it firsthand. That money goes away real quick. I
let
mean,
alone a bad out trade.
oh yeah.
Yeah. I just wanted to ask you if you ever noticed this. You know, some guys on the floor had very strong reps. They were almost, you know, legends walking onto the floor. And have you ever seen a guy who comes into the pit and because he does something, everyone goes with him? And what they really did was, say, for example, they got very long upstairs, right? And the market's going up, and they come into the pit and they just buy a little, and all the coattailers come in, and they were just looking for a way out.
Well,
And whenever and people didn't know they were already long from, you know, hours ago.
Right, they're pushing their position, and there's so many people that coattail these guys. You know, Richard Dennis was a big, you know, everyone liked to coattail his orders, and you know, if he wasn't physically doing the order himself, he'd have one of his orders, Jack Callahan or Jack's brother, you know, would do it. Jerry.
So you really didn't know if they were establishing a position or just coming down to liquidate based upon what they did away from the floor. That was a pretty cool trick, wasn't it?
You never really knew what they were doing. You didn't know if they were covering or getting in. Unless you know, you're standing there all day long and you see those orders coming in the morning and then a few more buys come in the afternoon, you know he's getting long. And so, or you assume they are.
Okay. Yeah, a great trick. I mean, you know, that's the power of personality. You know, I know you've been teaching and mentoring for a long time, Bob. If you could break down one sentence, like I asked Jack Schwager this, what's the most important thing you could advise traders? And he said, find a trading style that suits your personality. What would be a Robert Dunnism that you talk about every time you run a class? That's probably the most important theme or narrative that you teach.
Well, the most important thing I teach, and it'll be pretty clear to everyone else out there listening, you know, and risk management in this business is clearly the key. When we're trading a leveraged product, we cannot let, you know, markets go against us too much because we need dollars in order to make more dollars. Those are our tools. We start running out of those tools, we can't make dollars. So risk management is the number one, you know, rule that I teach. And, you know, you would think everybody would know that, but they don't really know that. And
they hear it, but they don't practice it.
They hear it, but they don't practice it because when you have money on the line, all of a sudden you become emotional and you do what I call you're getting married to the trade. You start to marry it because, you know, you got money involved and you got long for a reason. So now you're going to talk yourself into every reason why that long trade is good. And we can't marry any of our trades. So
better to date them, Bob, you know, for a few days.
That's what I talk about. We date people. We don't marry them. And, you know, and you know what? Sometimes the women think I'm a pig when I'm talking, you know, like, but I put humor on it because I let them know. I go, hey, come on, you guys do the same thing. You dump us the second, you know, you don't like one of our little habits and you dump us. So, you know, but they get
especially if they dump us if we don't practice good risk management.
Exactly. Right. So, but, you know, they get it. And the thing is, you know, risk management is so key because I've seen, first of all, 9 out of 10 people do not make it on that trading floor. And I've been down on that floor since 1980. So the common thread that I've seen amongst the losers that are here today and gone tomorrow, the common thread is all risk management. Most of these guys that blow out, they average into losers. They don't use stops. You know, they let the losers go too long. I mean, that was the common thread that I saw amongst everything. And
okay,
then,
Bob.
Yes.
Okay, so your Twitter handle is Trader Goalie 1 because you know how to play defense, right?
I am a hockey goalie.
Okay. Any other way that people that are listening right now or tune into the video later can reach you or get a hold of you, I recommend you follow Robert at that Twitter handle at TraderGoalie1, and that's spelled out, isn't it? O-N-E.
Spelled out. Trader Goalie 1, all spelled out. And
Okay.
I could be reached on there. I post the S&P tweets, you know, the upside market and the downside market every day. Once in a while, I'm a little late getting them out because I'm either on an airplane or I'm out to dinner and I just, you know, don't get home to do it. But I get them done. And occasionally I'll quote out the currencies. If I see a layup type trade that looks like, you know, an easy shot, I'll throw that out there and put it out there.
Oh, talking about layups, how are the Bulls doing this year?
You know what? They're not doing that good.
Okay. All right. I'm not surprised. And I'm sure you were heartbroken. What a great season for the Bears this year. And
I was definitely heartbroken for that. They got rid of the kicker, you know.
But what a great season. I mean, it's the most excitement. You know, I'm still a Bear fan, even though I don't live there and I'm in California. But I tell you, what a great season.
Terrific.
And you know what? What a great interview to bring the color of the, you know, what used to be into the present moment for traders. That, you know, it kind of says nothing really changes, even though there are robots instead of people. Trading is trading. And thank you so much for edifying the faith community today, Robert, my Chicago trading warrior brother. May pips rain down on you throughout 2019. Hope it's a great year for you and everyone you teach.
I hope you have a great year. I mean, we should all have a great year. And, you know, and the main thing that I could tell everybody out there, we talked about risk management. It's following those rules. I have very simple rules in my classes. And one of them is, you know, never break the rules. And you know, what is one of the rules? Always use a stop and know what your loss is going to be on every trade.
Yeah, no mental stops, because the last time I used a mental stop, my first stop was a mental institution. So Bob, it was great. It was great chatting with you, buddy.
Thank you. Same here. I love it. We'll do it again.
Okay, that's a promise. So everyone, Robert Dunn, thank Robert. And you got a little bit of market history here that still applies in the modern age. And again, you could follow Robert at TraderGoalie1 on Twitter. And that's a wrap for Turnaround Tuesday, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks again, buddy. It was a great interview.
Talk to you soon.
Okay.
All right. Bye-bye.
Adios.